All right, in this lesson, we are going to look at our third and final example in this section where we're going to show you how to prepare an income statement and a balance sheet. And we are going to keep with the same rules that we talked about before, in that we start with the income statement, then we'll flow to the balance sheet. Now, we are skipping over the statement of retained earnings, but we're going to need to do that in order to get to that balance sheet. So don't forget that. So just because a problem doesn't have that middle component doesn't mean that we don't do it. We still need to do it. Otherwise, our financial statements are going to be all out of whack. So let's go through this example and I'll show you step by step how we're going to solve it. So here is the information on company A, which organized their business on January 1, 20X1. At the end of its first year, the following information is provided. Cash of $45,000, AR or accounts receivable of $22,000, supplies of $8,900, equipment of $21,000, accounts payable is $36,900, common stock is $48,200, total revenues was $84,000, and then operating expenses is $72,200. Complete the income statement and the balance sheet for the first year. No dividends were declared during the year. So we've got all this information. Now, I can't fit all of this on the screen at the same time as I give you an example. So at some point, these numbers are going to go away. So just know that. But these numbers are what's most important. So let's go ahead and talk a little bit about that income statement. So what do we know about the income statement? We know the income statement is going to have revenues and expenses, and that's it. So if we look through our list here, we can actually pinpoint those revenues and expenses, and then everything else we don't care about. So here, cash is not a revenue. Cash is an asset. AR is an asset. That's accounts receivable. Accounts receivable means that someone owes you. You're about to receive money. So the word receive is in that account name. So accounts receivable, you're receiving that money. That's an asset. So that's not revenue or expense. Supplies, these are supplies that we have on hand that we haven't used yet. So if we haven't used it yet, it's not an expense yet. Equipment is not an expense. We'll talk about that later on, but equipment is not an expense until we do something called depreciation, which I know you don't know what that is yet, but that's an asset to us. Accounts payable is the opposite of receivable. The word pay is in there. We don't like to pay. Why are we paying? Because we owe someone money. That's a liability, so we're going to X that out. Common stock is an equity account. That's not a revenue or expense, so we won't deal with that. Total revenue. So that's our revenues there. And the next one is operating expenses. So that's the other one there. So we did all that work just to know that the last two are the answers here. But that's how we should be thinking about it. So this is a simple example, but we can make this a little bit more complex with more accounts and more names. And so that's the first thing that I want you to do, is start to subtract things that aren't that important. In this case, if it's not revenue or expenses, I don't care about them. Okay. So now we got to prepare the income statement. So we've got a mock-up of the income statement here. And remember, the first thing that we do is we have the who, the what, and the when. So who is this for? This is for company A. What is this? This is the income statement. And what period is this for? This is for the year ended 12/31/19. Okay? Or X1. You didn't see that. X1. Okay. So for the year ended 12/31/X1. Now the key here is, because the income statement is for a period of time, we're not just going to put December 31st, 20X1. We're actually going to tell the user that this is for a period ending with 12/31/20X1. If we only put 12/31/20X1, the assumption is all of this data is for the day 12/31/X1, which wouldn't be correct because we accumulated all of this revenue over a year and we've accumulated all of these expenses over a year. So when we do this, we got to make sure our dates are correct, and they're different for different things. So this is for the whole year, so 12/31/X1. All right, so what is our revenue? Our revenue is $48,000. What's our expenses here? Our expenses are $72,200. And so how do we calculate net income? Revenues minus expenses gives us net income. So our net income amount is $11,800. So that's what our income statement is going to look like. We've got our revenues, we've got our expenses, and then we got our net income. So now we're going to move on to the balance sheet. As we move to the balance sheet, you should know that these numbers have to go away. So I have these numbers right in front of me, which you might want to have them as well. So if you're a millennial, which you probably are, just take a picture of your screen right now with my pretty face, and then you have all the numbers. Actually, I'll do one better. Let me move back one here. You can take a picture of this on your phone, and then you have it, okay? So I'll give you a second to go ahead and take a picture of this. All right, so now that you have a picture of me, now you have it in front of you, okay? So let's go ahead and move on to the balance sheet. So the top three lines are the easiest thing. That's the who, the what, and the when. So who is this? This is for company A. What is this? This is going to be the balance sheet. And what is this for? This is for a period. This is not for a period of time. This is for a date in time. This is for 12/31/X1. Why is this one a date and the other one's a period? Well, that one's to reflect the operations over a period of time, revenues over a period of time. This is a date. So the balance sheet's always a date because that cash number is going to fluctuate on a daily basis. So if we put for the year of, we're saying that the cash was X amount of dollars for the year of, which doesn't make sense. It is the cash balance as of today, the AR balance as of today, the supplies accounts as of today, the equipment balance as of today. And so because of that, we are going to put today's date instead of a period of time. So that's why we're going to put 12/31/X1. All right, so now we're going to fill it in. We start with our assets, the most liquid first. So in this case, we have cash, to the least liquid, which is equipment. And then we're going to do the same thing for the rest. Now, we've cheated here because I've given you the side titles on the left-hand side, but you might have to prepare a balance sheet where you're going to have to come up with your own list. So again, we're making it easy here, but that's because we don't want to spend too much time writing these down on video here, but just know it might not be this easy at the end of the day. All right, moving on. Let's go ahead and look at our list here. So if I look at my paper here, it looks like we have cash of 45,000. So I'm just going to copy 45,000. It looks like accounts receivable was 22,000. And it looks like supplies was 8,900. And then equipment was $21,000. So those are all of our assets. I don't see any other assets because the next one's accounts payable. That's a liability, not an asset. Common stock, that's a stockholder's equity, not an asset. And revenues and expenses we don't put on here, so we don't care about that at the end of the day. So I can add up all of my assets. When I do that, I'm going to get $96,900. So our goal in the next part is we want the bottom part to equal 96,900. Why? Because the balance sheet is all about the basic accounting equation. Assets equals liabilities plus owner's capital or stockholder's equity in this case. So let's go ahead and go down further. All right, do we have any liabilities? Yes, we do. We've got one liability here. That's accounts payable. That's $58,400. So $58,400. So our total liabilities, that's it. We don't have any other liabilities, is going to be $58,400. Oh, sorry. I'm looking at the wrong example here. The liabilities, the accounts payable is not 58. That used to be the right answer. Now that's not. It's 36,900. Now, if you yelled at the screen, you did it right. So if you didn't and you just copied me, that's not going to help you on an exam, for instance. So check my work, okay? So $36,900 is our total liability. I got that wrong because I was using a different problem. That problem was wrong, so I had to redo it. So $36,900. All right, moving on to common stock. If we look, common stock was $48,200. So common stock, $48,200. And then retained earnings. Well, if you notice, I don't see any retained earnings at all on this sheet. Well, what do we know? Well, we know that retained earnings, we can calculate that, right? We start with beginning balance plus net income or minus net loss, and then subtract dividends. Wait, we calculated net income in the last slide. So if I go back one, we see that net income is $11,800. So $11,800 would be our net income. So beginning balance is zero because they just started, so they wouldn't have beginning balance, so zero. Plus 11,000, what do we say, 11,800? So 11,800 is net income. So 11,800. Dividends, I don't see anything about dividends on my sheet here, so we're going to assume that no dividends were paid. So 0 plus 11,800 plus 0 is 11,800. So retained earnings is going to be $11,800. All right, so now we can add up our three numbers. Our total liabilities, first of all, we're going to do total stockholders' equity. Sometimes that line is not here, so just FYI. Sometimes this total stockholder equity is not there, and it just says total stockholders' equity and liability. It's just the norm. So if that's the case, it's okay. If you don't have a total stockholders' equity, just add up all their numbers. So in this case, we are going to do it because that's what it says here. So $48,200 plus $11,800 is $60,000. And then total stockholders' equity plus liability, $60,000 plus $36,900 will give us our $96,900. How do we know if we did it right? Well, we don't know exactly that we did it right, but what would give us an indication if we did it right is if our total liabilities and stockholders' equity equals our total assets, right? Assets equals liabilities plus owner's equity. In this case, they do. And guess what? It looks like that we did it correctly. So our balance sheet balances. So we're good. If your balance sheet doesn't balance, then you know you did something wrong. Like you need to go back and fix it wrong. Okay. So there's no excuse for it not working because you know you got something wrong. All right. So that is a look at how do we prepare an income statement and a balance sheet. I've got some questions here that we should answer here. How do we know if a company made a profit or loss? Well, we know that there was a profit and loss if the revenues exceeded expenses. So revenues have to exceed expenses. Does it make sense? If we took in $1,000 of revenue and it cost us $500 of expenses, then we know that we could pay our $500 of expenses and still have $500 left of money that we can do something with. So revenues have to exceed expenses. So that's how we know if a company made a profit or not. Based on the company's balance sheet, can they pay their liabilities with the resources they have? So this one's a tricky one. So what this is saying is, if we look at their liability, are they able to pay it with the resources that they have? So let's look back here. So their liability is $36,900. Can they pay their liability? Well, let's first look at cash. Cash, yeah, they can. Right? So they could actually take their $45,000 in cash and pay off all of their liabilities and they would have no liabilities. So the answer is yes. But what about if cash wasn't $45,000? Let's say it was $25,000. Could they still pay it? Well, essentially, no. But if they collect the receivables, that would give us 25 plus 22 is 47,000. So conceivably, yes, they could pay their liabilities. If we had to get to supplies, we could sell the supplies. That would also be able to pay it. We wouldn't probably get $8,900 for it. We'd probably get like $5,000 because we'd have to liquidate them to get cash quickly. So in generally speaking, yes, we can pay our liabilities with the assets that we have. We notice that they are not highly leveraged. What do we mean by highly leveraged? As we said in a prior video, highly leveraged means that their total liabilities exceeds their total stockholders' equity. In this case, it doesn't. So we know that that's okay. So yeah, they can pay all of their liabilities with cash only. Okay, so that's kind of the analysis of how do we think about these numbers. So I want you to also think about, yeah, we have the cut and paste A plus B equals C kind of a type of work in accounting, but we also have a thoughtful accounting, conceptual analysis, comprehensive analysis of what's going on. And so when we look at that, that's what we get. Yes, because we can pay for it with cash. So that's kind of how we answered those questions. So that's our example on income statement and balance sheet. I hope you learned a ton here in this lesson on how do we put together these income statements, how do we put together these balance sheets, what mind thought should go through our head as we're doing that. And at the end of the day, how do we analyze what we have in front of us to actually make decisions on the well-being of an organization or a company's financial position. So hope you enjoyed this lesson, and we'll see you in the next section. Hey guys, it's Patrick. Before you skip ahead to the next section, just wanted to come on here and tell you to not forget to like this video and maybe share this video with someone that you know that would get a lot out of this lesson. Maybe a classmate that you know. This would be a great way to introduce them to this channel. So share this video with them, maybe your mom or your dad, someone, so that they know that you're really learning accounting topics here on YouTube and you're not just playing cat videos over and over again. Now, if you want to help us grow this channel, what would be great is if you press the subscribe button and maybe even turn on the notification bell if you want to get alerted the next time we upload a video to this channel. And put in the comment section below, what did you eat last night? It would be so weird for people to come and look at the comments, but what did you eat last night? I might throw in a comment after you if you put that in the comment section below. So do that now. What did you eat last night? All right, so enough of the fun stuff. Hope you enjoyed this lesson, and we'll see you in the next video.